Hey, how's it going, guys? It has been a wild ride for Tesla shareholders in the past couple of months. After consolidating for 2 years, starting from June 2019, Tesla had a crazy bull run. The stock went up 447% in just 8 months. So what is up with Tesla? Is Tesla extremely overvalued? Did Tesla cheat their financial reports? Or even is Tesla still undervalued? In this video, I will go through some of the key issues on Tesla, share some of my honest thoughts, and most importantly, try to answer if Tesla is still a buy at the current price. Alright, let's get started. When it comes to the stocks, no matter it's a long-term investment or a short-term trade, the very first thing I will look at is always the earnings. It shows how good this company is at making money. When it comes to earnings, there are 3 key things I will look at. First is the total revenue and the net profit. Second is the rate of change of the revenue and the profit compared with the same quarter last year. Rate of change shows how fast this company's profitability is growing. Some fund managers like to compare 5 years or even 10 years rate of change. In this video, I don't want to waste you too much time, so I will just compare the first quarter of this year with the last year's first quarter. And the third key thing I will look at is the average estimate on future earnings of next year. This is crucial because the financial market never trades based on the current economic data. It always trades 6 to 12 months forward. What does it mean? It means, for example, the stock price of Tesla today is no longer reflecting the current financial data. Instead, it's the total sum of what investors believe or anticipate how Tesla will perform the next 12 months. You have to understand this forward pricing concept when you play the financial market. Now let's start with the revenues and the net profits. This is the most recent financial reports from Tesla. I took out all the key numbers for you guys so it's easier to see. In the most recent quarter, Tesla made almost $6 billion in revenue and $1.2 billion as net profits. In fact, this is the best quarter Tesla has ever had in terms of both total revenues and the net profit. Let's take a look at the rate of change, or the growth rate, compared with last year. For the revenue, from Q1 2018 to Q1 2019, the rate of change is 33.2%. And from 2019 to 2020, it's 31.8%. Although the revenue jumped to almost $6 billion this year, the first quarter, the rate of change is actually quite flat. It shows the revenue growth is actually slowing down. However, if we look at the net profits, from Q1 2018 to Q1 2019, the rate of change for net profit is 23.9%. And from 2019 to 2020, the rate of change jumps to 118%. And that is what excites the investors. It's a really bullish sign for Tesla. Then let's move on to the future earning estimate on Tesla. These are the numbers we should look at. The annual EPS estimate for the remaining of this year and next year. EPS stands for earnings per share. So how to use these numbers? These numbers show how much earnings investors expect Tesla will generate in the future. And Wall Street analysts often use these numbers to find the price target range. In this example, the investors believe that Tesla will be able to earn $4.32 per share by the end of this year as net profits. Based on the current share price of Tesla, $815. It means for every single dollar Tesla is going to earn in this year, you're paying $189 for it. It sounds really crazy, but why people are still buying it? It's because of this number. Investors believe that by the end of 2021, Tesla will be able to earn $12.22 per share. That is almost 300% more than what is Tesla earning this year. And that translates to investors believe that they're only paying 66 times of the earnings instead of the 189. So for some of them, $815 to buy Tesla stocks right now is a bargain. What do I think? Well, first of all, with the current price, the risk-reward ratio of buying Tesla is pretty bad. The downside risk is a lot more than the upside profit. Second, I believe the $12.22 EPS for 2021 is a little bit overambitious. Based on what is happening around the world due to the coronavirus right now, plus such low oil prices, I don't see the demand for electric vehicles will have a sudden 300% jump within 1 year right after the lockdown. Well, I just don't see that is happening in just 1 year. I would say the more reasonable estimate EPS for 2021 next year would be around $8 to $9. That would be more reasonable estimate. Second, my comfortable range for paying Tesla is around the 40 times of its earning, not more than that. So that translates to the price range of $320 to $360. If we show this range on the Tesla weekly chart, we can see that this price range perfectly matches the Tesla long-term support level. Speaking about support level, let's jump into the technical analysis on Tesla. Let's take a look at Tesla's daily chart and see how Tesla's recent market structure looks like. As we can see, since the February to March crash, Tesla has been a typical V-shaped strong bull run, and trading in this converging channel closely. The potential top is at the 920 to 940 area. This week, Tesla is consolidating in a tight range with low volumes. It looks like Tesla is forming a base to continue the uptrend. And that is a good sign when the stock is trending up. When the stock is trending up, we don't want to see the big swings. What we want to see is exactly this type of low volume tight range basis with high volume breakouts. I really like Tesla's recent setup. However, my biggest concern is that we're very close to the potential top, and there will be a lot of sellers waiting there to either book their gains or start shorting Tesla. The reason we do technical analysis is not trying to predict where the market will go next. Instead, we use technical analysis to find the places where there is a strong imbalance between buyers and sellers in the market, and then react to it accordingly. From the chart, we can see that the buyers are definitely taking over the market now and staying in control. Anything can happen in the market, but there are two possible scenarios I'm looking for in the next couple of weeks. Scenario number one, if the market continues trending up with this converging channel, will Tesla break out from the top with high volume? Or will Tesla start another big sell-off with high volume? That's the scenario number one I'll be looking for. Scenario number two, if Tesla breaks the channel and heads lower, will Tesla fill up this gap and continue heading lower? So these are the two scenarios I'll be watching closely for the next couple weeks. I will definitely keep you guys updated, so make sure you subscribe and stay tuned so that you won't miss out anything. Tesla is a typical vertically integrated company. What does it mean? It simply means from manufacturing to distribution, from retail to service, Tesla does everything under one roof. But the key question here is Tesla really just a car company? This chart shows how Tesla makes money for the year of 2019. The car sales contributes 81% of the Tesla annual revenue. So based on the numbers, yes, Tesla's main business is still selling electric vehicles. However, the way I see Tesla is more than just a car company. Behind the tangible numbers, there's a way much bigger intangible ecosystem that Tesla is building and selling. And this Tesla ecosystem not only justifies the insanely high valuation today, but also gives Tesla great competitive advantages compared with other car companies. So what is this ecosystem that Tesla is building and selling? Simply put, it's a triangle model combining three huge industries together under one company. They're auto industry, technology industry, and energy industry. For the technology part, Tesla is building an advanced hardware plus software integrated system for its cars. When people talk about Tesla, they often focus on how cool or how fast the car is, or how long the battery can last, but they often overlook the fact that Tesla's unique software is way ahead of any other car companies combined in the world. One example is the machine learning on the autopilot. Artificial intelligence technology is going to be a huge part of our future, especially when the 5G internet starts rolling out. And the most important thing for AI and machine learning is the data. Data is the new currency. Tesla understands it better than anyone else. Through their seamless software and hardware integration, the amount of data Tesla collected from their vehicles is an extremely important asset that will help Tesla in the long run. For the energy part, from the solar power roof to the power wall, from the Model 3 battery to the supercharger stations, Tesla is disrupting the entire energy industry. They are literally building an entire energy net for car owners from your home to your car. Even the name of the company comes from a legendary inventor, Nikola Tesla. And Nikola Tesla was never a car guy. He was the energy guy. And that shows the true ambition of Tesla as a company at the very, very beginning. Since the first day of the company, they never wanted to limit their true potential to just selling cars. The more people drive Tesla, the more people will rely on their ecosystem. And the more people rely on their ecosystem, the more difficult for them to switch to other brands. This ecosystem that Tesla is building will eventually give them huge pricing advantages, and that translates to more profits in the future. So in my opinion, no matter how many people are skeptical about Elon Musk as a CEO, I truly believe Tesla has an exciting business model for the long run. So the question, is Tesla a buy? Well, it depends on how you play it. For the short term, I would definitely stay away from Tesla. The entire economy, especially the car industry, is not providing a great demand environment for Tesla to have another strong bull run. So the risk-reward ratio if you buy at the current price is pretty bad. However, for the long term, I'm definitely bullish on Tesla. Because as I mentioned before, I see Tesla is more than just a car company. And my target range to add positions on Tesla is from 320 to 360. Alright, that's pretty much what I want to share for today. There's still a lot of things I wanted to talk about when it comes to Tesla. I will definitely make more videos to share my thoughts on Tesla in the future. If you are new to this channel, my name is Vic. I make videos every week to share some of my thoughts on what is going on in the financial market, and also what are the trade ideas or investment opportunities that you should pay attention to in the market. If you are interested in the world of finance and the business, please consider subscribing. Thanks for watching guys, and I will see you guys soon.